As I mentioned in the intro, you've had a great start to the year. You're up 11.9% net of fees. Everybody knows what the S&P 500 has obviously done. What'd you get right?
Just a couple of things. Most of our net long exposure has been in Europe, and I think Europe has outperformed, or at least it was outperforming the U.S. market earlier in the year. We kind of got much more conservative in February when we felt that the market was turning and bought a lot of index protection. And it's been a fabulous year for gold, which has been a core holding for us for a long time.
For a long time. I mean, we've talked about gold so many times. You have, through options and physical gold.
Yes.
Where do you think gold's going?
Higher.
How much higher? I mean, it's at record highs.
I mean, the thing with gold, as I've said a lot of times, if gold is, I don't know, 31 or 3,200 today, I'd be really happy if it went to 3,500 or 3,800. I'd be really unhappy if it went to 30,000 or 50,000. So I hope I don't wind up being, too unhappy.
If it goes there, or anywhere even close, what does that mean? That inflation's gotten too high?
Gold is not about inflation. Gold is about the confidence in the fiscal policy and the monetary policy. And since we bought gold in 2008 or so, it's been very clear to me that the U.S. fiscal and monetary policies are both too aggressive and create a risk.
So you think that's going to become an even greater issue? I mean, here we are having a conversation in Washington about re-upping the tax cuts. So we're concerned about the deficit, but maybe not enough to do anything about it just yet.
Well, we're not really concerned about the deficit. There's a bipartisan agreement to do nothing about the deficit until we actually get to the next crisis. When I was here for your Delivering Alpha conference and we spoke, there was an enthusiasm that Doge would come and cut $2 trillion. Well, a few months has gone by, and it's like $150 billion, maybe. Like, that's enough to cover next year's defense spending increase. That's going to get eaten up really, really fast. People were thinking tariffs might raise hundreds of billions of dollars. Now it looks like maybe like $100 billion. And meanwhile, we've just brought in the best cost cutters with the most aggressive views as to how to deal with our deficit situation. And essentially, they've thrown their hands up and said, well, we can cut a few things around the edges, but structurally, we have to leave the tax code actually with more tax cuts and the structural spending we have, whether it's entitlements, defense, and interest, relatively unchanged. So everybody agrees that it's a structural problem and is not sustainable, and yet there's not even the beginning of a plan to do anything about it until there's an actual crisis.
You have multiple bets, if you will, that play off of your view that interest rates are going to remain high, particularly on the long end, correct? I mean, you have had swaps as protection on that, and that's another reason that you've done so well to start the year.
Yes, we've also been long the longer duration inflation swaps. I think all of these behaviors are ultimately lead to inflation and higher inflation.
You referenced this earlier. I don't want to gloss over it because it was in your most recent investor letter that in February, I mean, you were already conservative, but that you got downright bearish. What happened?
Yeah, we began seeing, I thought, first of all, that they began firing people in the government, and I think they began terrorizing what I would call to be Democrat voters, or people who are in businesses relating to Democrat interests. Those could be nonprofit, those could be universities, there's people in the government, and I felt like there was a chill that was being put on. Not like half the population was ebullient about the election, and half the population was depressed, and we were beginning to see spending slowing down in what I would call companies where Democrats like to shop or eat. And you saw a number of them, miss the first quarter results, and I began thinking that this could lead to a real a slowdown.